Welcome to the channel. Today I have Jeff Sekinger joining us yet for another episode, and today we're going to be going over some of the myths within the algorithmic trading industry, and more so the ideologies around it. I believe a lot of people get into this space and they believe that it's just passive income and they can do whatever they want and let these softwares run effortlessly. So today I want you to share a little bit of the reality in this sector. What would you say to the people getting into any algorithmic trading company, let alone Nurp, and having the understanding that it's just passive income?
The first thing I would say is there's no such thing as 100% passive income. A lot of the algorithmic trading strategies that we use do take the majority of the work away from the trader, so that the trader is just making sure that the account is functioning and the strategy is functioning how it's supposed to. And they do need to monitor the accounts, because at the end of the day, it's their own money trading in the market, and no one can predict what the market's going to do. And since you don't know what the market's going to do, there can be things that randomly happen that can throw off a strategy. And that's when you need to be, paying attention to your account more. So I would say that's number one is, nothing is truly 100% passive. If someone else is managing your account and they don't have a license, or you're not in like a legitimate hedge fund and you haven't signed a PPM and subscription documents and things that typical hedge funds have, they're probably, especially if you're operating in the US, they're probably not operating legally. Yeah. So I've heard about a lot of different companies like managing other accounts for their users, and that's just completely not legal. So if that's the case, that's still active management on behalf of you by whoever their employee is. So that would be number one, and then number two, it's still a high risk vehicle. So it's important to understand that any type of trading and any type of investment that has leverage increases the degree of risk. So some people, they see like some crazy returns in algorithmic trading, which we've experienced some awesome months before, and they think that that's going to be the return for eternity, or that there's no risk behind that. And what you got to realize is it is considered high risk, and it's important to understand in your entire portfolio, what percentage of your portfolio do you want in algorithmic trading or something that's high risk? You never want to just throw your whole portfolio in something that is completely, high risk. So it's important for an investor to understand and prudently look at their allocation and say, okay, I want 2%, 5%, 10% of my portfolio in high risk investments. Maybe it's crypto and algorithmic trading. Like that's what it's for me. Like the two high risk investments I have is algos and crypto. But I'm not throwing all of my money into one of them, because they're considered high risk investments.
So, and I understand all of that, but for the people, why do they feel that they could just use this as a passive income tool?
I think just because of maybe not understanding algorithms for the most part. Like they hear algorithmic trading and that the algorithm executed, like we've had accounts that have executed tens of thousands of trades with no human intervention, and like that is reality. But at the same point in time, there are certain things that happen in the market that you can't predict, and an account can run for years without you intervening whatsoever. But then sometimes there are random events where, you do need to pay attention more. So there are certain times where, you can let it run for a long time and it can be good. But then there are little things like MetaTrader rolls out an update, right? And now you need to, close the window and re-download the MetaTrader application and then restart the window and get things to update. Because if you don't do that, then the algorithm's not going to trade. So there's certain things that like happen. It doesn't even have to be a move in the market. It could be MetaTrader rolling out an update and you need to refresh the window. And if you don't, your strategy is going to just sit in those trades and it's not going to execute new trades.
So you have to be tentative to the software because of unforeseeable things.
Yeah.
But I guess people feel that it's passive because sometimes for maybe large portions of time, they don't really have to do anything.
Yeah.
And then they deem that as like, this is what it is. I don't have to do anything.
Yeah.
Yeah. Okay. So what are we doing inside of Nurp to make sure that we can educate our people to understand that this is not a passive tool? This is something that can help you optimize your portfolio. Do we have any like education or material that we're going to be rolling out, or what is it that we're going to provide to the users?
We've had education since day one. That's always been the cornerstone of almost everything that I've done. But as far as our product goes, our like core product ATA, we've always had education. and always framed it as, hey, this is a tool. This is a tool for you that's really powerful, but you need to be educated to understand how to use the tool in your own portfolio and in your own account. So we have a bunch of different risk management videos, how to set up softwares, troubleshooting if you have these certain issues. And then we have more one-on-one support. We've got 3 open calls a day where clients can just jump into a Zoom call, talk to us directly. We've got relationship managers that clients can reach out to and talk to them one-on-one. The community is a huge aspect with thousands of users that are using the software to bounce ideas off of them. But then, some of our, we have certain requirements too with onboarding, which we've heightened even more recently, where they have to go through certain videos and then they have to actually take like a really small, pretty much quiz to confirm that they've listened to the videos and they understand what the videos meant, so that they understand how to use the software, how to turn it on and off, where the stop loss setting is, things like that. There's a ton of education and accountability that has to go on in order to make sure that the user knows what they're doing and how to use it.
And on the product side of things, how are we going to be optimizing our softwares now and moving forward into the future to make sure that we have the proper risk parameters for anything that we do?
Well, all of our strategies have always had a stop loss since day one. So every single strategy
like
that we have,
like a default stop loss, or
in the settings, there's a setting where you just select. There's 2 things. You check one thing from false to true, which means it says equity stop loss. You turn that to true, and then you just type in whatever percentage you're comfortable with as being your stop loss. So let's say you have a $100,000 account and you set you turn that setting to true and you type in 30 in that setting, which is 30%. So when an account draws down by 30%, it'll close all of the trades and get you out of those trades completely. So that if something crazy happens, some random news, China decides to bomb the world and we head into World War III and currencies go crazy, you're out of the trade and you're taking 30% loss, but you're protecting the rest of the account. So that's always been in there. But no, there's certain all of our systems on a default level, the user needs to adjust that, because there's no secret number. There's no, the best stop loss is 10% or the best is 20% or the best is 50. There's no specific number, because there's so many different dynamics of markets. And when you're in a ranging market, there's a lot you need. You can have a tighter stop loss, but when you go into a trending market, you need to have a much wider stop loss, but that it also increases risk as well. But it's because that there's typically more drawdowns when there's trending markets. So it just depends on what type of market that you're in, and that's determined by a lot of different things: trade deficits, CPI, inflation, interest rates, all those things. It's ultimately the power is in the hands of the user. For me, on my accounts, I usually set the stop losses to 40 or 50%. And then for lower account sizes, when I'm trying to push to be more aggressive, I don't have a stop loss on those accounts, because essentially the whole account is the stop loss, because I have so many different accounts, right? So it's not like I'm worried if I have a $30,000 account, I'm willing to risk that entire 30,000 because I'm trying to push for 15 or 20 or 30% a month, which is obviously super high risk. And the higher the percentage I'm shooting for, I know the higher risk I'm taking. And if I lose the whole account, I'm okay with it, because I've already understood that is. And then some of my bigger accounts, I set stop losses at 30, 40, 50%, and I'm just aiming for like a 4 to 8% type return.
Okay. All right. So before I even go further into this, none of this is ever financial advice. This is just for educational purpose.
Letting you know what I'm doing.
Yeah. So essentially what you're saying is, let's say you have $500,000 allocated to multitudes of softwares. You setting up individual accounts with X amount of dollars in there, you're willing to risk that, and that is essentially what your stop loss would be on the whole overall 500,000. Like say you have two or three high risk accounts with like 10K, 30K, and 10K.
Yeah.
Those are all small accounts you're willing to put fully at risk out of a $500,000 pie.
Yeah, because essentially, like if you think about it, if I have $100,000 in algorithmic trading, let's say, and I have a $10,000 account that I'm being high risk with. If I lose that entire account, okay, that's a 10% loss. I'm okay taking a 10% loss. So I understand holistically of my portfolio of strategies, if I completely lose an account, That's 10% of my total portfolio in algorithmic trading, and that is my stop loss. So sometimes I have accounts that I'll try to push harder to get a higher return, and then some of them that are bigger, I'm like, I don't really want to risk $300,000, so I'm going to set a stop loss at X percentage. Does that make sense?
Yeah, that makes sense. On the product side of things, do we have anything new in the works? Maybe a new product, or
Yeah, I mean, a lot.
or how products enter sequences or anything like that?
Yeah, I mean, we have 4 strategies that are currently being built behind the scenes that we're excited about, and we see a lot of good data so far on them. And then one of the main things too is our machine learning piece. So I don't think you've had Pascal on the channel yet, but he's one of our AI quants that has been in machine learning for over a decade, and that's something that we've been working on for quite a while. Is how can we determine the trend better so that we are not getting in circumstances where we're let's say that we have a big trend to the upside, and right before it reverses, we're putting in a buy, and then it starts to drop, and then we need to scale into that through our risk management sequence. We want to be able to identify that trend better based on recent market data, and that's what the machine learning is helping us do. Is it's significantly lowering the drawdowns in our back tests. At least we haven't live tested this yet, but in all of the testing, which has taken a fair amount of time, it's significantly lowered our drawdowns, and it has decreased profit a little bit, but not as nearly as much on a percentage basis as it has dropped the drawdown. So what that means is we could increase the size of the trades that we're telling the algorithm to take, and now it's going to increase that profit number, but the drawdown is still going to be lower, because in proportion to profit and drawdown, that ML filter is dramatically dropping the drawdown. So that's something that we're working really hard on, and we plan on having that rolled out probably by the end of this year. And I think that's going to help a ton on the risk management side, because the algorithm will get into less drawdowns, if that makes sense.
Okay, interesting.
And then another thing is just more trend following systems. So like the whole market dynamic recently has shifted from, like, now that countries are really pivoting on interest rates because they're worried about jobs numbers, and even inflation's come down a bit, so they're starting to willing to drop rates. Or Japan's freaking out, so they're increasing rates. But we're seeing countries make really, like, in Japan's situation, it was a 17-year flip on their decision. In the U.S., right, we've been hiking rates at the fastest rate ever since 2022. So now we're starting to, the Fed recently said that it's time to change their policy decisions, which means that they're probably going to change the direction of the interest rates. So now we're starting to see really trending markets. So we have got 2 systems in the pipeline that are trend following systems that will just place a trade, put in a stop loss at a certain level, and then just allow that to really milk through that trend, that open trade. So it's aiming for much, much larger take profits instead of like a lot of 0.1, 0.2, 0.4 type percentage moves. It's aiming for bigger moves in the market.
And how would it identify when it is in a trend?
Well, mainly through the ML that we've been testing in one of the systems. And then there's multiple trend filters that we use, and we pair 3 of them together to better identify that a trend is coming. And then on a fundamental level as well, understanding that the algorithm can identify certain things that are happening inside of a country relative to the other country, because each trading pair is one currency against another currency.
Yeah.
So if this country, right, in the numerator is decreasing rates, right, that pair is going to get a lot weaker. So if we know that this country is decreasing and this country is increasing, then we know, okay, we only want to go short on that pair, because it's very likely that pair is going to be weak because of the changes in rates.
So it has like a fundamental filter to a degree.
Yeah.
Yeah, nice, amazing. So we spoke on risk and a few other things. The last thing I wanted to touch on is, and again, this is not ever financial advice, at what point do you recommend yourself to take profits or take anything out of the market? Because you can't just have the idea, I'm just going to let it run forever, let things be forever.
Oh yeah, I mean, since I've done this for many years on really any speculative investment, when an investment doubles, triples, quadruples, I'm always pulling principal. So I just listen to people that are smarter than me. Okay, Warren Buffett's got, he's like, hey, I got 2 rules. Rule number 1, don't lose money. Rule number 2, don't forget the first rule. So pretty much he's saying there's one rule, and that's don't lose money. And if you don't lose money, guess what's going to happen? You're probably means you're making money. So when I take that, I say, okay, if my account doubles, like if I have a bigger account size, I usually pull the profit out almost every month. Sometimes I skip a month or two, and then I pull a bigger amount the next month. But for the most part, like when an account doubles, I am pulling the initial principal out of that account to protect it. So that's my personal risk management strategy that I take from a guy like Warren Buffett that is smarter than me and has been in the game longer than me. And that's something you'll see on like almost all my FX accounts. I mean, you'll see that I just consistently keep pulling money out of them because I know that if I can protect the principal and I'm playing with house money, first of all, your emotions are a lot less in investing and trading when you know that the money that you have in the investment now is all profits.
Yeah, it's free money.
Yeah, it's house money, and when you're playing with house money, you think a little bit differently about the investment. So, and you usually make less emotional decisions. And then it's just the fact of, I like to not only pull principal, and sometimes I'll diversify into a different strategy so that I just don't have one point of failure. I just don't want one point of failure. Even with it's like, a broker. Like I'm not going to have all my money in one broker.
Yeah.
I'm going to spread out my money across different brokers and then have different strategies with those brokers so that I don't have that one point of failure. And then when I double the accounts, I'm pulling principal out. And depending on where other markets are at, like sometimes if, the crypto market's down, I'll pull profit out and I'll put it into crypto. And then when crypto rallies, sometimes I'll pull some out of there and spin up a new account and then use a different, I'll use a different broker or a different strategy. And so it just depends on what's happening in the market and things. But yeah, that's always been my rule. And I see people because I talk about that so much, I talk about pulling principal and too many times. And some people are like, yeah, that makes so much sense. Thanks for sharing that. And then they just get too greedy and they don't do it. And then it gets to a time where they get into drawdown and they're like, man, I really wish I would have done that. And It's like, at that point, it's you just have to be disciplined enough.
Yeah.
It's just like fitness or working out or your diet. It's like, what to do. Are you going to do it?
Yeah, that's true. That's a good point. Well, I think that's everything I wanted to cover today. I do want to leave the users and anyone looking to potentially license the software, what can they expect from Nurp in the next 12, 24 months here?
I mean, we have internal milestones of all different things that we're working on, but you can just expect to continuously see us building and building a spectacular team in technology. And that's something that is always my number one focus is how can we make the product better and how can we create a better team? Because ultimately, at the end of the day, the business and the product is only as good as the team, and that's what I'm focused on.
And that's why we got machine learning coming into the mix here soon.
Yeah, for sure. I mean, that's just the beginning.
Yeah. Well, I appreciate you taking the time out to hop on here and talk to me and everyone else watching. So thank you.
Absolutely. Thank you.